Hey everybody, it's 9/9 of '09 and it's time for a quick market update. We'd like to address some of the topics we talked about last week. We had mentioned the non-farms payroll report was coming out and that would directly affect the market and the direction in which trading occurred. And I'm going to go ahead and take a look at that report here. We're on the Yahoo Finance calendar, which is just a real simple place to go find this data and information and to keep your finger on the pulse of all things market. The non-farms payroll report, let me explain these numbers to you. The market had forecasted that 230,000 people would potentially lose their jobs. The updated estimate just prior to the data release said, you know what, we think it's going to probably be more like 265,000. And then the actual report came out with just 216. So in a basic way to state this is that it's less bad than it was expected. The reality of it is there were still 216,000 job losses. Unemployment creeped up to 9.7%, slightly higher than the forecasted estimates. And the market, the knee-jerk reaction was, hey, that number's not as bad as we thought it was going to be. And if we look at the trading action that ensued, I'm going to go ahead and close that out. And I have a chart of the S&P index here that you can see. You can see that as of Friday, today being Wednesday, Tuesday, Monday, Friday, as of Friday, the market held that ground and posted a couple of days of gains. And the one thing that I have found interesting is that these gains have been posted on decreasing volume, meaning there's not as much strength behind it as some people think. Now, that being said, we are trading up into this resistance zone. I'm going to take a real quick look here. This candlestick out here, let me go ahead and get rid of these crosshairs. This candlestick out here, that upper shadow tells us that today price is posted higher. And from the highs, we're seeing that drop back. Now, where that closes will give us a strong indication as to whether or not the market thinks that it can handle these higher prices. There is a known resistance zone. The last time the market traded out here, the market rejected these high prices. It says we don't like those high prices. Last week we discussed the slowing momentum, which was the distance between the price ceilings had decreased, showing us the signal that the market was losing some strength. And we are looking at this last little run here, and this particular candlestick out here trading near resistance as a potential sign that, hey, maybe this resistance zone will hold. If it doesn't, I mean, it clearly can break to the bullish side. The question is will it? From a larger time frame perspective, looking at that weekly time frame, we are still trading at those technical zones that are really critical. I'm going to go ahead and draw a trend line off of the major market peaks and kind of connect the dots as well as possible. And when you do that, you're kind of getting out where we're still trading in that ballpark. Now, when I draw trend lines, I consider it a zip code or a zone. And I would say, you know what, it's a ballpark. This entire neighborhood out here is suspect. And you can see where it's tested out in these general areas. This is a phenomenon of market geometry that's very tightly tied into Elliott wave theory and some of these concepts. You can also see that there's been some historical price levels here where we have old floors for the S&P could become new ceilings. This is just price thresholds. People remember these price zones, and they use them technically to help them make decisions in trading. We are seeing the exact same phenomenon still on the NASDAQ. We see that long upper shadow quite pronounced. And if that ends up closing down, that becomes an evening star doji. At this point in time, it's just a long upper shadow. But if it were to close a little bit lower and give us a doji type candlestick, we would see that that was a potential signal for reversal. It's testing that resistance zone, and so far it's holding. It is testing it though. And from the larger perspective, we are still trading at these same technical zones where we say, hey, these are places where the market might make a statement. Old support could become new resistance. And it's a battleground. So we really just have to watch the market closely, and what we're going to be watching out for is any turn to the downside. And if it does manage to close above these levels, then the question would be how much further will it run up as the bulls manage to maintain their control. But otherwise, watch out for those bears. Again, September and October historically are rough months for the market, and just keep your vigilance out there. All right, thanks traders. Have a great day.